Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts at Trade the Chain. My name is Nick Mancini, Director of Research at Trade the Chain, joined by CJ and Monte, both senior research analysts at Trade the Chain, and we are here to break down everything for you in the world of TradeFi, crypto, and everything else in between. So it was, even though, we all took the weekend to have a little bit of fun, there was always something going on that we have to talk about. So we're going to get into the curve situation, which I'm sure everybody is aware of now, talk a little bit about the base L2, I think it is, created by Coinbase, and a few of the tickers that exploded on there, one of which being bald. And then we're also going to talk about a little bit about, PCE, FOMC reaction from last week and how we think that is going to play into August and then the next meeting in September. So let's go ahead and kick things off. What we're looking at now is just the PCE data from last Friday, which is obviously noticeable because it is continually showing that inflation is dropping. The actual numbers are the ones that I'm highlighting here. So PCE dropped 3% from 3.8% the month prior. And core PCE, which is PCE minus food and energy costs, dropped to 4.1% from 4.6%. So you'll notice this is, still a long ways off of the 2%, but it's much closer than where we were, which was double digit inflation not so long ago. Well, I'm not full double digit for core, but I think the one takeaway here that everybody's going to be focused on over the next couple of months is this core number. Although PCE is dropping, the Fed is not going to stop until they see core at that 2%. So that is something to carry in mind. There are many financial analysts that think that 3% may be the new target, and Jerome Powell is blowing a little bit of smoke on the 2% target, but he's been saying 2% every single meeting. So I'm not ready to call his bluff right now. So this is what I'll be paying attention to, but obviously major drops over the past couple of months. And we have CPI in just a couple of weeks, I think actually next week, that will hopefully follow up and continue with that data. And if it does, I would expect the market, to react positively. So I'll pause it here because this actually kind of starts the broad macro conversation. CJ, Monte, are you guys believers that inflation is going to keep going down? CJ, you may have noticed, I've seen energy prices tick up a little bit. Oil is rising. Gas prices were rising prior to oil getting a little bit of life in it. So are you concerned at all about possible inflation prints over the next couple of months? Because I think the one thing is that everybody needs to be aware of is if you're getting an inflation print in July, that's June inflation. So we still kind of have this summer to assess, which is typically higher demand, more spending as people travel and move around. So are there any red flags that you guys are looking for in the context of inflation right now, CJ or Monte?
I think we're in a pretty good place, and I think inflation is continuing to decline primarily for a lot of reasons Monty had talked about in our show earlier today, which is like when you look back at the primary causes of when we saw very rapid and large spikes in inflation. This is where commodities were really going, much higher as well, things like wheat and so forth. But you also had, a lot of logistical issues when it comes to, transporting various goods and services. The fact that just like toilet paper went up, it skyrocketed. Those like shocks to the system, in my opinion, were the primary causes of inflation. And now they've seemed to dissipated, and we've seen inflation come down really like faster than anyone has anticipated. I think even the Fed. And so now I think they just have to be kind of cautious till they get to that 2% target. The thing that I think is very interesting, though, in terms of positionings and potential opportunities within markets is that this is one trade that I think is going to be a very good opportunity, maybe in like 6 months or a year. It depends. But when you look at fixed income and, everybody's trying to get their 4.6% right now, whether it's Robinhood or Coinbase, which is great, but that's probably not going to last forever. It's starting to become a very crowded trade. And so that trade will probably continue to go on in terms of lower like treasuries, things like TLT, probably not going to do well. However, if the Fed starts easing or if they actually cut rates and stop, then I think fixed income is going to be a very, very interesting place to look because of how crowded it is right now. But based on how the Fed has been very adamant, that could be like 6 months, it could be a year. We really just have to see. But while we're on the discussion of like rates, I figured I'd just put out that kind of trade idea or like positioning like setup.
You're muted, Nick.
I'm muted. Okay. But did you have anything else to add to that, Monte?
No. If you guys didn't catch our show this morning, Money in Motion, we did actually talk a lot about inflation, and I think CJ summed it up nicely there. So yeah, we can go ahead and move on.
Okie dokie. Yeah, no, I tend to agree with CJ. I definitely think that, if we can get through the summer without any, craziness within the inflation battle, then I do think it looks pretty good heading into Q4. Of course, anything could change, but definitely more or less agree with that. So the next big thing is the curve finance. And I guess I'm going to call it an exploitation. Doesn't seem exactly like a hack, so to speak. But and I will obviously warn, CJ, Monte, and I are not developers. We're not technologists at heart. So speaking about this from a very technical focused perspective is probably not what we're going to do today. But I figured it would probably be a better use of our time to talk about the curve chart and how we expect this to continue to perform moving forward. It's obviously had a pretty rough year, rough couple of years as we kind of zoom out. And obviously, we're sitting down here at the 61 cents level, didn't fully sweep the lows, but, had a decent sweep down here. So with the whole, situation going on, it seems like it's affecting, a lot of pools, which is probably going to scare people away from using Curve. But on that other hand, if you weren't shorting it yesterday, I'd say the majority of that trade is probably over. Massive sell volume spikes, nearly equal sell volume day two, but was unable to even reach that low. So CJ, Monte, on either the technology side or the price action side, do you guys have anything to add here? Are you guys touching this? Are you guys tracking it? Anything interesting around a trade opportunity? I don't think it's that attractive, but maybe you guys are seeing something that I'm not.
Yeah, I mean, I haven't really traded a lot of altcoins lately. Curve's not really been on my focus either. But I mean, this seems to have really impacted DeFi and crypto as well. Interestingly enough, the crypto equities are pretty well like insulated from this particular event, it seems, or at least that's how they're trading. But as for like trading altcoins and things like Curve, I haven't really looked. I think the liquidity is probably just suboptimal when compared with other choices, especially on like various perp exchanges. But Monte, any additional thoughts in terms of like trading around Curve or the situation and its ramifications in general?
Yeah. I mean, from a technical perspective, what happened was, I mean, this was actually a relatively sophisticated hack. And if you guys didn't know, they did end up returning the ETH that they stole. But the sophistication of this was actually very interesting. So Viper is a compiler, which is essentially just a means of converting one language of code into another language of code. And Viper was being utilized by Curve Finance. So this was like not so much an exploit of Curve itself, rather an exploit of the compiler that they were using in order to, switch to their native source code. And the person that figured this out is, a highly, highly intelligent individual. And also I would consider them to be like a white hat hacker. And I think when you see something like this happen, right, and companies like Microsoft do this and companies like Apple do this, but like, why are they not putting out bug bounties for people to try as hard as they can to break these things? Because clearly they are breakable and exploitable. And like, we're just relying on the good Samaritan nature of this hacker to return the funds. Luckily they did, and they found this massive exploit that someone else could have found and taken the money, and disappeared. This person chose not to do that, but Curve, as it stands, doesn't have any bug bounty program in place, nor do, that I'm aware of, any other DeFi protocols. I think that would be a step in the right direction in terms of legitimacy. Companies like I said, Microsoft and Apple use them regularly to find bugs in their new programming software, and I think that's something that Curve could deploy and benefit from massively.
It's a good point. And, I've seen, there's been some companies in crypto that have had the bug bounties and have done well. There's been other companies, I think, what was the one notable company? Maybe it was Coinbase that was offering like pennies on the dollar for a bug bounty. It was like, 5 or 10 grand. And it was, for an exploit that could make you millions. And so it was, you need the right incentive systems, right? Because if you're only getting 10 grand and you can, run off with millions, it's probably more cost effective to be a criminal in that standpoint. And you see this all the time with like regulatory arbitrage, like banks, if they know they're going to get fined for doing something bad, but they'll make more money after the fine, they'll probably still do it because they know they'll just get a fine and keep walking on whatever road they're on. So great point there, Monte. And I think, we've seen this too much, and usually it's a nation state actor, definitely, North Korea and other nefarious nations have certainly been involved. So good thing that it's white hat here. But definitely we were kind of gearing up for this Dino DeFi summer, and everybody was excited about these older coins that were pumping, and this kind of pumps the brakes on that. So be very interesting to see how this impacts other coins, around the old, old school original DeFi sector. We may see a little bit of depression in that, but Bitcoin, still holding up, above the 29.1 level. So let's go ahead and just kind of switch over to that thing. We'll cover ETH and the base kind of all in one go. And I'll zoom out here to get a bit more of a local perspective. But we've got my lines here. This is trading extremely technically. We've got, our range right here with 29.5. We've got, 29.1. Kind of the low end of the range. We just kind of broke out of a symmetrical triangle and barely, nothing really changed. So I've just kind of got these here because sometimes price will jump off of the lines. But if we kind of just zoom out, we've got 1, 2, 3, 4, and almost 5 taps at the 29.5 level. And we said, we told the TTC community, break above 29.5, you'll move higher. Another rejection, you're going to move lower. And we pretty much almost met that second low target. But of course, we didn't even reach that high target either. So market makers are certainly having fun with inducing additional pain as we trade in this tight range. But what I'm going to go ahead and do is kind of get rid of a few of these lines, zoom out a little bit further, and kind of discuss context for, because we are starting a brand new month. Tomorrow is August 1st, so today is month end. We're not starting a new quarter or anything like that, but just from a macro perspective, RSI hasn't fully reset, just kind of flatlined. We've got this, this high from May sitting there that hasn't been tapped. We've also got these lows from last week down at 28.8 that have been untouched as well. And we continually keep rejecting off of the 29.5, 29.6 level. So, and there's been little volatility. And if we go check the TTC dashboards, it's a Monday and we're still down 7%, volume compared to the 30-day average. So, I'm adding all of this up, and it's still difficult to be bearish. And of course, sentiment is still bearish as well. So, Monte, CJ, when we're looking at the chart, are you guys patiently waiting for volatility? I'm kind of in that mode where I really do want to short, but I feel like it's better to play off of the next move that comes, right? Whether it's a spike above 29.5 or it's a spike down to 28.5. What are you guys thinking? Are you guys playing this patient? Are you guys actively in any trades? Are you guys and if not, are there any targets in which you would like to get into a trade?
I think looking at targets like things like 28, while they could be possible, it kind of misses the bigger picture of the potential opportunity of growth and the secular trend that's emerging with the Bitcoin halving and Bitcoin equities. Like the shorting here to me just doesn't make sense from a risk reward perspective. If anything, this is dollar cost average territory where you're looking for assets that could potentially do multiples in 2024. We talked about inflation and more organic growth occurring in the economy. You're starting to see that reflected in the stock market, also with things like the Russell 2000. So while retail wave of capital might not be coming into crypto right now, barring a black swan event like what we saw with COVID in 2020, I just don't think you're going to see that much lower of prices in terms of Bitcoin. Like people who were hoping for like 25K or things like that. I see a lot of influencers and like chartists talking about that. And the more they talk about it, the more I kind of grow skeptical. So if I had to sum it up in one sentence, I think this is dollar cost average territory for crypto equities. Bitcoin, it could go down going into the end of the year, but if you're looking at it from a more 12-month to 15-month time horizon, that's where I think we're at.
How about you, Monte?
Yeah, I'm in a similar boat. We talked about it briefly this morning, but I think, here's a good place to be spot buying, if you have a longer term time preference. But one thing I will say is that this is very reminiscent of 2019. And for me, it's like, you have crypto related equities pumping hard, right? So we have stocks like Coinbase, Riot, Mara, all showing outperformance relative to BTC. So it makes sense that after a while of seeing that outperformance, people would be like, okay, why am I trading Bitcoin when I can be trading the crypto related equities? And these things are actually, moving, and, it's actually easier to get exposure to them as well. So like, why would someone be buying Bitcoin right now when you have, the NASDAQ making new all-time highs? CJ joked that he remembers me going on this same rant back in 2019 in the Market Rebellion offices, but I think it's still true today. Like, why would you buy Bitcoin here unless you're in it for the long term? Like, I'm talking about an immediate trade. Like Coinbase has earnings this week on Thursday. If you want exposure to the crypto space, you're probably going to play that earnings bet rather than buying spot Bitcoin, in my opinion, just as a short-term trade. But I do agree with both of you in the sense that in the long term, I think that 29K and like the fact that we're being held up at this level amidst these macro conditions, I think that it is favorable. And when Bitcoin does move, which who knows what the catalyst will be? I can't predict it. I don't have a crystal ball. So there will be eventually catalysts that will make it move. But we've seen Bitcoin trade sideways for months, and I think that is definitely a possibility. That would be like worst case scenario for Bitcoin traders, is just constant chop between 29.5 and like 28.5, just getting constantly chopped, no gains to be had really. And I think that is actually a very plausible scenario given the fact that volume is continuing to decrease. If you look at here, I'll just throw my chart up real quick. This is something I mentioned this morning as well, but if you just take a look at these like Bollinger Bands, you can see like they're still technically diverging. We're not getting this sort of big convergence of the Bollinger Bands yet. So that tells me we could plausibly see a period of like low vol for an extended time. And like I said, like that would be a very painful scenario for a lot of Bitcoin traders. And I think it makes a lot of sense that they would rather be, or not rather be, but like you got to think about the opportunity costs of putting your money in Bitcoin when you have things like Coinbase, which is, kind of bouncing back. It has earnings on Thursday. Plausibly, if it beats, we could see a big jump there. I think that is where the speculation is occurring. And that's why we're seeing such little volume in Bitcoin right now.
It's a good point. And low volume typically does mean low volatility. And that kind of is a, negative feedback loop, if you will, until a shoe drops, meaning, some sort of news cycle or a big whale sells or buys and kind of freaks all the algorithms and traders out. So have to be patient until that happens. Volatility will return, but the market can stay irrational longer than we can stay rational, and that's always something to keep in mind, especially during the summer months. So let's keep it moving. Let's touch quickly kind of on ETH in the context of what's going on with the L2s. ETH is really just as boring, and of course I've got a couple of my lines from where the TTC where we suggested if then statements TTC. But just comparing this to the Bitcoin chart, it's not that wide of a range, and it looks painful, and I'm sure a lot of people are going to want to short here, and we may rip up to 1885 again just to induce more pain. So I think a lot of what Monte said about Bitcoin is going to also translate over to ETH. So not too eager to trade that, but I think one coin that's been notable lately has been OP. And obviously it's had it's struggled for much of 2022 after the, initial bullish January and beginning of February. But, this whole base token has excited OP traders because there is no base coin. And I think base, is either a fork of OP or utilizes OP technology. I'm not entirely sure what the technical story is there, but there is a close link. And of course, base, the testnet, I believe, launched over the weekend. And of course, the shitcoiners and the degens did not waste any time on that. So in terms of the OP trade, I think if you're longing this now, might want to get your head checked a little bit, but I definitely still think, if it can obviously hold above this recent high of $1.66, there's still a chance. So the day is still young. There's still 5 hours left and anything could happen, but I would be very cautious if you're trading, the coin that is connected to base purely on the quote unquote base play. And that is because the leading token on base, what is it, BALD, BALD, rose 2 million% and then gave all of it back this morning after the dev pulled liquidity. So I'm going to pull up that BALD chart just so everybody can get anxious for a couple minutes.
I think I already know what it looks like.
Gains. I mean, it looks like Safe Moon, looks like Luna. Here we go. Here is a good showing for you guys. So this is what happened to BALD.
I thought bridging bridging your token without a front end would have been a decent idea.
Or a bridge for that, CJ. So for people who don't know, to get your tokens onto the base chain, you had to send them to a random Ethereum address. Then you had to add the RPC, which is basically the chain you want to connect to via MetaMask. You had to pray that the tokens reach that wallet, and then you were allowed to trade after a certain amount of time, or at least allowed to buy things on the testnet. So what we're seeing here is, a bunch of people getting into a token. Now, I have no clue how you engineer a token to do 2 million% on, a couple $100,000 worth of liquidity. That in itself, deserves to be in the Hall of Fame, just because, anybody who can engineer that it's quite insane to think about. 2 million%, guys. I mean, that's like, I mean, you put $1 in and your life has changed. So, it's quite fascinating to see this, but extremely predictable. If you're dabbling in meme coins on a chain that is on testnet with no bridge, with no front end, with no wallet, and you're not taking profits, then you're kind of getting, I think, what you ask for at the end of the day. So I don't think we need to spend too much talking about this, Monte or CJ, but any wise words for base traders in the future? Are you guys bridging? Are you guys staying away? CJ, is your entire net worth on base right now? Yes or no?
Nah, it got lost in the in the bridge.
It got lost. I think I sent you my personal wallet instead of the bridge wallet.
I do have a semi-serious point to make on this topic, though, that we're on it. The old on-chain degeneracy as you would call it, the willingness of market participants to still have that excitement deep within them to be early to capture, the next big thing in crypto. The fact that you still see that type of risk taking and speculation, even when we're in the most dead or low vol type market environments, I think it's still bullish for the use case of crypto as pure speculative casino game of chicken. And the fact that people are still kind of doing that means that use case is still alive and will likely continue to be so. Especially if stock market goes to all-time highs, then you have a whole new, perception of risk taking that kind of captures the market. But the fact that we still have like speculation, even in the lowest, vol environment, I think is quite optimistic.
And I think that kind of says something. I mean, maybe you can make a link to the fact that on-chain actions have risen, and that could have that could influence centralized exchange liquidity if everybody's moving their ETH to play BSC and Solana coins and ETH coins. That could definitely have an impact. And I think also, a lot of people have been following, like, if we're looking at this tweet, like the Pepe whales or the Doge whales, if these guys are buying stuff on chain, a bunch of people are going to follow because they're like, oh, this guy made $1 million off Pepe. Like, there's no way he's going to lose any money on this crap token on base. And I mean, that's literally what people were saying. And we laugh because we've seen it happen. But, I hope people who are watching the show kind of are learning in kind with with everybody else. You don't just, smart money is not always right. Maybe they're right 51% of the time, but if the more you follow them, I think that you create greater risk for yourself because it's not your strategy. So just another thing, centralized exchange volume could be on a detriment because of these types of actions. And then if you are pulling money off centralized exchanges to follow whales, just, think hard about your actions and whether or not your risk profile is better spent on, a centralized exchange playing 5-10% swings or something like that. So with that being said, let's move on, because I think if we keep talking about 2,000,000% gains, we're all going to throw something at the wall on the fact that we missed the opportunity. But CJ, I know you've got a couple of TradeFi charts that you're prepping down there. So why don't we bring in a little bit of what's going on the side of the trading wall that's been making a lot of money lately?
I don't know about that, but I'll share what I have.
Well, maybe making money is the wrong one. At least prices have been rising on the TradeFi side.
I'm just messing. But yeah. So what do I have up here? Oh yeah, dollar. That's why I stepped away for a moment just to go. I needed to bid some DX futures. Euro had an interesting news failure event today with some ECB numbers coming in. So dollar's still pretty strong, and we're still continuing to see that relationship where dollar and equities don't seem to have that much of trouble going up in tandem. Obviously, NASDAQ's pulling back a bit today, but the one indice that I've been focusing on a lot, and the move that I really want to capture, if it comes here, is the Russell 2000. The reason why I've been trading around the Russell as opposed to any other US indice is because it still has the most large speculator shorts, meaning that they could get squeezed out and forced to cover, which could give us a nice breakout move up to 2100. So that's basically what I'm trying to capture in terms of this breakout move. So I am long there, and I think dollar also is an interesting potential hedge and could also work because it seems to be somewhat correlated to some of the smaller assets within the market. Aside from that, I do think there's some interesting opportunities in Alibaba. Monte and I both bought this today, I believe, if I'm not mistaken.
Correct.
So, same type of play. Like, I like this breakout right here. It looks to be quite nice. And Alibaba's really been beaten down so much. And when you look at HSI, Hang Seng Index, it's actually at a really nice week.
Inverse head and shoulders on both.
Yeah. So, while you can't really trade, I don't have access to trade Hang Seng futures. However, a proxy is Yin or 3X Bullshare China ETF, just through, Direct Zillion daily. But yeah, that's basically where I've been looking. We can also talk a little bit about semiconductors, but I don't want to go on for too long. That's basically what we've been looking at. To summarize, just equities, I think we're still in a good place in terms of growth. I think stocks are probably going to continue going higher. But I want to pass it back to you guys first.
So you mentioned DXY, which we've been tracking closely, and we've noticed, a serious inverse correlation with crypto and DXY. We haven't seen that too much with equities, but I am noticing DXY, inching higher today, and equities are mostly muted, or equities indices, I should say, are mostly muted. So I guess, so in terms of your hedge, are you long DXY and BABA, with similar size, or are you, or are you kind of just saying you think both can rise at the same time here?
Yeah, those aren't. So I should say BABA is like an equity account, and I separate that entirely from my futures portfolio. So I wouldn't, like, if I was going to hedge the futures portfolio, it would be internal with another futures. I wouldn't. BABA is just kind of like an interesting secular move that Monte and I were talking about this morning. It looks pretty good from a charting and momentum perspective. As for DXY, still a lot of shorts, still a lot of crowded longs in the euro, and they're starting to get squeezed out. So just kind of trend following that for the foreseeable future. It's really gone nowhere but straight up ever since that one Bloomberg article came up saying bears declare death of dollar or something.
While we're on that, I think you put in something interesting in the TTC community today. What was it? Was it a Bloomberg Disney, or was it
Barron's cover of Disney? So it's saying to buy Disney because Disney's in a very long downtrend.
And Barron's is I know we've talked about The Economist. I think we've talked about Forbes, but Barron's is up there on trading inverse magazine covers. And I actually received their daily markets email, and I love it because whatever they're bullish on, I'm usually thinking the opposite that morning. And it's pretty funny just to see how accurate that is. So it's one of the few newsletters I get, and it's purely for an inverse trade basis. So I was interested to see that in the TTC community today, because I don't read their magazine covers. But Disney has, I won't go into all of the political nonsense and stuff, but Bob Iger's been on TV a lot, and that's normally only if he's pandering. So I think take that as what you will, but maybe we'll talk about Disney a little bit later this week. Considering it's on our headline tracker situation. So Monte, I know I could see you prepping some charts down there as well. What do you got for us?
Yeah, well, I'm in a lot of the same positions as CJ. One also that I mean, he mentioned BABA, of course, but I really like that yin setup. I think China in general right now, like if you go back to what we talked about at the beginning of the show and inflation and reminiscing back to that period of time where logistically there were so many issues that were leading to inflation, right? Like I remember analysts talking about, ships being piled up at the port of China and like ports in LA being backed up for days. It was like impossible to get furniture. You couldn't get a couch or a table or like stupid things like that.
That I remember too. Yeah.
Yeah. Like that has all completely quelled and died down. Like now you can pretty much get anything quickly. The ports are all moving as they were prior to COVID and prior to everything that happened. So I think, and one of our favorite analysts, Jason Shapiro, he talked about this kind of concept of being in the Goldilocks zone where you have inflation, like not being as influential as people think. And then you have a lot of bears in the market that still haven't capitulated. And I think that's very, very much the case. Like if you look at Coinbase, for example, I think this is a great example, has earnings this week, also heavily, heavily shorted, particularly following this massive day down. We saw so much short interest pile into Coinbase. That is essentially like adding fuel to the fire for this earnings report, in my opinion. If this beats on the top and bottom line, which there's really no reason it shouldn't, given the price action of not only its, the stock itself, but of Bitcoin and, everything else that's happened in the last 6 months and and the like reactions that other tech stocks have seen to earnings, I'm expecting to see a nice jump here from Coinbase on earnings. I think that we see, it doesn't even have to be, like I said, it doesn't need to be buyers stepping in, because I don't think that we will see that sort of conviction right now, because the DXY is still creeping higher, like you pointed out, Nick. So I don't think we'll see any conviction from the bulls, but capitulation from the bears, I think, is very possible following earnings. And I could think that could lead to some continued positive price action. And you can extrapolate that to many of the other big tech names in the queues as well, like Meta, for example. This one beat earnings and said, this is like an overreaction to earnings. I personally actually did just play like 1 day options, but I got out of it quickly because it seemed so crowded. Everyone was talking about how this was the top for Coinbase, and or this was the top for Meta, and how, this bearish engulfing candle here at the top of the uptrend was going to mark the beginning of the decline. And post earnings, there's no more positive catalysts. So for me, it just became too crowded of a trade. And once it reaches that point, then all you need is the bears to capitulate and you go higher. And I think that's a very likely scenario for stocks like Meta. Also stocks like Nvidia. People continue to try and short these things, and they get squeezed out. Nvidia doesn't have earnings until I think the beginning of September, or no, end of August, the 23rd of August. So not for a little bit, but CJ mentioned the semiconductors. I think taking a look at Nvidia and AMD is also interesting right now. AMD has earnings tomorrow after hours. That's one to definitely look out for if you're playing the semiconductors play. And the result of tomorrow's earnings could very well influence the whole semiconductor market. I expect to see, this is the last thing I'll say before I pass back. I expect to see AMD beat on the top and bottom line tomorrow, and perhaps see a brief jump up towards the 120 level before a little bit of profit taking and a pullback. I think we're seeing people trying to kind of front run those earnings today and expect positive price action. That's why it is green on the day. But ultimately, I do think that it beats on the top and bottom line, and we see some positive price action. So that's kind of where I'm looking. And like I said, why trade Bitcoin right now when there's volatility to be found elsewhere? And I think there's plenty of vol to be found in all of those markets, whether it's big tech or semiconductors or crypto related equities.
You make a good point, especially in regard to seeking volatility. And one thing I wanted to bring up in regards to Bitcoin is just typically how I approach the week moving forward. So yesterday on B3, I mentioned, I think, where were we trading? It was Sunday. Yeah, it was kind of right after this pump, in this kind of area. And so I was like, wait for the Sunday, trading to come through. But typically Mondays are bearish. They've been quite bearish as of recent, and today is obviously no different. But what I was kind of more or less expecting was a sweep down here of these lows. Because if we sweep the weekly low, the last week's lows to start the week, then you basically have your Monday range is pretty set. And, regardless, at the end of Monday, you're going to have your Monday range. So, I think 8 p.m. Eastern is when the daily closes. So our high for Monday is right up here where this green line is. And then our low for Monday, it could be right here. We still have like 5, or 4 hours, 3 hours. So, whatever that low is, if we trade around that low into tomorrow morning, I'll probably look for longs. Just because Tuesdays have been kind to us. Monday ranges have been, a lot of fake outs recently. And I think, the fact that we're still in this range is quite shocking to me. And of course, the daily looks extremely ugly, but LTF doesn't. And so I just have a feeling that whatever you think is going to happen based on the likely outcome from looking at the charts in crypto is probably just not going to be the case right now, because like Monte said, lack of volatility, tight trading range, better options elsewhere. And it's certainly in the market maker's interest to snag all of your short money down near the lows and then pump it back up so that you close your shorts and they they take in, you know, a boatload of cash, which is certainly what the market makers need with a lack of trading volume right now. So just something to be aware of. You know, I think by the time the end of Monday hits, you'll have your Monday low, and this is the Monday high, and then you'll have your range, and then you can just ping pong around that range. If you are a bit of a masochist and like trading Bitcoin over you know, CJ and Monte's suggestions. So just an option, because I know there are some crypto native guys out there who aren't going to switch to Robinhood or Fidelity. So I want you guys to get your volatility in as well. So with that being said, I think we are gonna wrap it up here. I wish we had more to talk about, but you know, it is the summer months, and you know, unfortunately, the best volatility we're getting is exploits and on-chain shenanigans. But hey, someone's making money out there. We hope you guys are as well. Big earnings, you know, coming up, still moving into August that we'll be talking about for a while. We have CPI next week. I believe we have unemployment on Friday. So we'll talk about that on Thursday and how that's going to impact price action into the weekend. And of course, CJ and Monte do a show every single morning. I believe 9 a.m. Eastern, or am I 9 a.m. or 10 a.m.?
Eastern, that would be a little early.
Yeah, 10 a.m. Eastern, right?
Yes, that's
correct. 10 a.m. So Monte and CJ do a show every morning at 10 a.m. So catch that if you need your morning coffee updates for what's going on in crypto. We obviously do this every Monday and Thursday. If you're part of the TTC community and are a member, we have our AMAs on Wednesday and plenty of other interesting content and shows in between. So keep up with us. Tweet us, you know, hit us up at Trade the Chain. CJ and Monte, easy to find in the community on Twitter. And of course, 14-day free trial at tradethechain.com, risk-free. Get in there, yell at CJ and Monte and I, tag us, ask us questions, poke fun at us, whatever. Just get in there and let's keep growing the crypto ecosystem, and of course, killing trades on equities, TradeFi, and commodities, and crypto as well. Alrighty, have a good day. Good luck. Happy trading, everybody.